Hi, I'm George Ogilvie, President and CEO with Arizona Sonoran Copper Company. We have a former producing mine in Arizona in the US of A. It's a copper company. We're currently listed on the Toronto Stock Exchange under ticker symbol ASCU. And we're currently conducting technical studies. And we believe in the next couple of years we can have the Sacaton mine, Cactus mine, actually in commercial production.
George, good to see you again. I haven't seen you since your last company where you did a bit of a turnaround exercise. What have you been brought on board to do here?
Yeah, well, I came on board here about 18 months ago, and we're currently in the midst of conducting technical studies, currently a pre-feasibility study. And the goal would be obviously to take the company through the bankable feasibility study and ultimately put this mine into commercial production. It's a heap leach operation with a standard SXEW plan.
Okay, but give us a sense of people's need, because we're new to this story, but you've been at 18 months and I haven't spoken to you since you came on board. Give us a sense of the sorts of numbers involved. You got some economic studies there, but what are the grades? What do you know today?
Yeah, so we conducted a preliminary economic study about 18 months ago, and using a copper price of $3.35 a pound, which is still about 10% below today's current spot price, with an NPV 8 after tax of $312 million US dollars and an IRR after tax of 33%. The capex for the project 18 months ago was relatively low at only $124 million US dollars, given that it's a brownfield site and we already have access to some pre-existing infrastructure on site.
Right, and give us a sense of how you were measuring this, because I noticed that you report your figures slightly differently compared to some of your peers. You're giving a slightly more realistic view of what you can actually get out of the ground. So, have you done much met work on this? What do you know?
Yeah, we've been conducting metallurgical work for the last 2 years, and obviously the column tests are particularly important. So this is a copper porphyry system that consists of an oxide, an enriched sulfide, which in this case is chalcocite and covellite, and then there's a primary sulfide, which we're not currently intending to mine with a heap leach operation. That's chalcopyrite. So the metallurgical test work for the oxide reveals a 90% recovery of the copper. And for the enriched material, we're looking at somewhere between a 73 and a 78%, depending on which column we're actually considering.
Right, and I don't know the district that well. So have you got many peers around you? I know you talk about it being sort of the confluence of three, copper districts. But what do you know about?
The project's located at the intersection of three massive copper porphyry systems. I think the closest operations to us would be Taseko and the Florence operation, which is about 40 kilometers to the east, and then 75, 80 kilometers or so to the northeast. We have Capstone Mining, who actually are in the district.
Right, and obviously your track record. Well, so far as I know, is about turning projects around. Would you consider this a reboot rather than a turnaround situation? Is that right?
Yeah, no, absolutely. The mine closed in 1982 when it was owned by ASARCO because it was uneconomical. At that time, copper would have been 60 cents a pound of copper. So I don't really see this one as a turnaround story. It's really a reboot, as you correctly inferred.
Right, and so I'm intrigued though, because I think right now it's very sort of difficult times. The costs are going up. We've seen supply chain issues. We've seen inflation go through the roof. We've seen many companies put out reports where their capex figures have kind of got blown out of the water, and others are using that to say, well, actually, maybe we just take a breather here and just move things along a little bit slowly, sort of see if the economy recovers, see if the costs do come down, whether that be fuel or acids or reagents or whatever. How are you viewing the environment right now?
Well, we're in the midst of conducting a pre-feasibility study, and it would be fair to say that we are seeing inflationary pressures both in capital costs and some of the operating costs. However, at only 124 million US dollars in the initial capex within the PEA, I mean, a 50% uplift from that would still only put us in and around 220 million US dollars. So, I still think at the end of the day, when we produce our pre-feasibility study and ultimately bankable, we're still going to be looking at relatively low sums of money when considering, bringing online a copper mine. The other thing that's going to help us here, Matt, as well, is that in the current studies, we have not included Park Salia, which is a large exploration property right next door, which we're currently infill drilling with the goal of bringing it into a indicated resource in the first half of 2023. And I think based on the size of the deposit and the grades, it's going to be extremely accretive for the shareholders of the company.
Right. Well, copper projects typically tend to do better when they're scaled up, which then obviously has its own challenges in terms of being able to fund the kind of capex component front ends. But the larger boys do tend to like a big project. So again, I know you're going through the studies and you're trying to understand the economics here, but scale usually for copper is a good thing. Who is the end buyer of this? Are you builders or are we selling?
No, I mean, certainly with the skill set that we have within the management, both myself and my management team, we have lots of operations experience of bringing mines into production and actually running them cost effectively and profitably for the shareholders. So I think ultimately at this juncture in time, we believe that we would, it's more accretive for the shareholders of the company to finance this mine and actually run it and put it into production. Of course, over that period of time, if somebody was to raise their hand and offer a very attractive, offer for the company, well, obviously we have a fiduciary responsibility and we would consider that at that juncture in time. I think given that we're in Arizona, 70+% of the copper in Arizona is for US domestic supply. So I think ultimately we believe that this copper will remain within North America and particularly the United States of America.
But what does good look like for you then if you're going to build this thing? What, in terms of scale, right? So you talk about the leachable component, certainly on the indicator being what is it, 74, 75 million tons at 0.72 something or other, I think, total soluble. But
yeah.
And there's a primary as well component to that, was much lower grade, would be half that grade. What scale do you think you need to get this to? Because so typically under 100 million tons is okay, but you kind of anything north of 200 is obviously clearly a lot better. So what are you aiming for?
Yeah, I mean, ultimately we believe that we can get this operation up to 100,000 tons of copper cathode production on an annual basis. The PEA initially started out with 28,000 short tons. We're currently seeing about 35,000 short tons in the pre-feasibility study. But as I said earlier, that does not include Park Salia. So there's certainly an opportunity with Park Salia coming into the production profile that we could move this up to 50 to potentially 75,000 short tons of annual copper production. I think the other opportunity that we haven't spoken about is really with the primary sulfides. We've recently engaged with Rio Tinto, who are looking to deploy a new technology which they call Nuton. And the Nuton technology should allow them to see the heat leaching of a primary sulfide, as we said, in this case, chalcopyrite. So the physical column tests have just started. It's going to take at least 3 quarters before we know the results in the second quarter of next year. But if the Nuton technology were successful, and in the initial preliminary modeling, we were seeing 75 to 82% recovery of the copper from the primary sulfide. If that were successful, then we could certainly take this operation upwards towards that 100,000 tons of annual copper cathode production.
But so has Nathan been working for Rio previously, and obviously just started with you, but they've been quite successful on some of their tests with their own projects, have they?
Yeah, it's a subdivision of Rio Tinto that's been experimenting with this technology in-house for the last 2 to 3 decades. We're one of a few operations in the world that they've actually handpicked to trial this outside of the Rio group of companies. So we're extremely excited about that. And recently in May of this year, when we conducted a private placement, Rio Tinto put $10 million into the company and is currently a 7% shareholder with the right to follow their money.
Right, but you're not reliant on the Nuton technology working. You're saying if it does, it can enhance things. Not necessarily meaningful,
yes,
but it
exactly.
Can
We're
things,
not
right?
dependent upon it. I mean, we ultimately want to control our own destiny, and I certainly think with the Cactus mine and with Park's Sailor, we should be able to produce a very robust pre-feasibility study, despite the inflationary pressures that we're seeing today at some juncture in the second half of next year.
Right. Okay. And the equity investment by Rio was that related to the Nuton technology being used, or is that a completely separate entity?
No, it was related. I mean, obviously they wanted to get a little bit of a toehold in the company, and they'd already conducted the computer modeling on the various samples which we sent them, and they saw some extremely good results there. So we entered into discussions that if we were going to carry through with the physical test work and commit to a 1-year exclusivity on the testing of the primary sulfides, in lieu of that, they would invest the $10 million.
Gotcha. Okay. No, I just think it's one of those things that kind of everyone's going to keep their eye on, and obviously everyone hopes it will work. But if it doesn't, it doesn't necessarily affect things. It doesn't mean you're a marginal project without it. It means you're a good project without it, but it could be even better with it. It's just we've seen projects like Chesapeake, buying in technology, perhaps hasn't quite worked, haven't been able to prove that it works. Fine. Enough said of that. With regards to the team, like again, obviously I know you. Who else is on the team that we'd understand, so that we'd know and perhaps recognise?
My CFO from Rubicon Battle North Gold, Nick Nikolakakis, he joined me in January of this year. He's got almost 30 years of experience in capital markets and financing. So he's going to be extremely important as we move towards project financing, let's say in 2024. On the ground in Phoenix, Arizona, where we have a small office, we have Ian McMullen. Ian's a mining engineer like myself. He started his career with Newmont. He was the chief operating officer at Klondex several years ago, which I believe ultimately was sold to Hecla. And then Rita Adiani is our corporate development, VP of corporate development. She brings a law degree to the table and also 15 plus years of experience actually in London with capital markets experience. So we've got a very well diversified team that have ran operations in the past and completed financings and put mines into production. So I'm very excited and happy that they've joined me on this project.
Right, and in terms of the share register itself, I mean, what's the kind of balance between institutional, retail, etc.?
Well, it is certainly very institutional focused. Our largest shareholder would be Tembo Capital. It's a private equity group actually out of London. They've been heavily invested in the copper space over the last 10 years. They were initially involved with Ero Copper in the early days, which obviously had been a roaring success there in Brazil. And today they're also heavily invested in Maramaca, which is a copper project in Chile. Pre-IPO, they would have been about a 44% shareholder. We IPO'd this company in November of last year. They have committed almost $40 million to the company to date. And today they would be about a 35% shareholder in the company. So they've supported the company and management by putting their hands in the pocket, but at the same time, they realize it is important that they be diluted down, and I think ultimately we'd like to see them below 20%. We also talked about Rio Tinto, and then the management of the company controls some 6% of the stock. And since joining the company in July of 2021, I've currently invested 2.8 million Canadian dollars of my own money at a weighted average price of $2.48 Canadian.
Okay, you're committed. Right, okay, so in terms, so you've got, how much money have you got in the bank as of last quarter?
We've got 28 million US dollars in the bank. We're currently burning through about $2 million US dollars a month right now. So those monies we estimate will take us through until the second quarter of 2023.
Okay, and what are you doing with that money? What are you burning $2 million on at the moment?
Well, as we touched on, there's been various engineering studies up till this point in time, but the guts of the money is really going into exploration drilling and now infill drilling. So exploration drilling at Park Salyer, and we just recently announced there that we'd completed a 28-hole program on 500-foot centers, which we're hoping very shortly to convert into a maiden resource estimate for Park Salyer, which will be in the inferred category. And several weeks ago, when that drilling finished, we've now started the infill drilling on 250-foot centers. And that'll bring Park Salyer into an indicated resource sometime towards the end of the first quarter of 2023, which will then allow us to take that indicated resource and build it into a rescoped PFS in the summer of next year, where, as you know, an indicated resource can move over into probable reserves, and therefore the mine plan and the financial and economic model will be hopefully positively impacted by Park Salyer.
Right, and again, have you got a target in mind with regards to the maiden resource for Salyer, in the sense of you trying to get the scale thing we talked about at the beginning?
Yeah, well, we estimated and we gave some guidance to the market in January of this year when we started that drill program, that based on the geophysics and the sonic soil sampling and the size of the signature that we had, we thought that for the leachable material, which is the oxide and the enriched, we could potentially get up to 2.3 billion pounds of copper in the ground at better than 1%. And the upper limit of the primary sulfide was about 750 million pounds of copper that could be upwards of 0.5 to 0.8%. So in totality combined, we could be looking at something that's around 3 billion pounds of contained copper in the ground to be added to the current 3.3 billion pounds that we have at the Cactus mine, which is in our current compliant 43101 resource.
Right, okay. Really getting there, okay. And so you'll need to raise money before end of Q2 23. You'd be looking to probably raise some more capital?
But the current monies we have in the bank would take us towards the end of the summer Q2 2023.
Right, and was that the opportunity to then kind of change the approach? You talk about diluting Tempe, or Tempe allowing themselves to be diluted down to nearer the 20% mark. Is that what do you do there? Do you, given the scale that you're going, do you go after more institutions? Do you need a bit more liquidity in the stock and perhaps open up to a bit more retail? How do you get that balance right?
I think we need a little bit more retail in the story. Obviously, we're heavily weighted on the institutional side, so that's one of the reasons why, from a marketing perspective, we're paying a little bit more attention now to the retail investor. So we think over the course of the next year, if we could get more retail into the stock, that'll help with liquidity and should help with the share price.
Right, and what do retail need to know? Because it's been a sort of, I think 2021 was a tumultuous year for copper, for nickel, most battery metals. It's come off a wee bit this year, so that the shares don't, share price, not just you, I'm talking everyone, don't look so healthy. But what's the growth profile for copper look like for retail?
Well, the growth profile for copper looks absolutely tremendous. I mean, currently today, the world is using anywhere between 25 to 30 million tons of refined copper on an annual basis. If you think about the whole decarbonization that's taking place, particularly in the westernized world, there are forecasts that in the next 10 to 15 years, that demand for copper is going to rise to approximately 50 million tons of refined copper. And, when you look at new discoveries in copper mines, they just aren't taking place. Those mines that have been discovered in the last decade, typically they take anywhere between 10 to 15 years to actually put into commercial production. And of course, normally a copper mine would cost billions of dollars, high capex to put into production. So there's definitely challenges with getting copper mines into production. So that is really going to limit the supply side. So my sort of thesis or thinking on this is that in order to meet some of the demand, really the miners that are in production and those that could be close to production really need to be incentivized, and the only way to do that is through pricing. So we know that the vast majority of copper comes from Chile, it comes from Peru as the number 1 and 2 miners in the world, but those are huge open pits that are getting deeper. The costs get higher as you go deeper, the grades are getting lower, and in order to keep those mines viable, it really is going to require a significant increase in the copper price from what we see today. And I think that's the opportunity for long investors, institutional and retail in the copper space. What you've got to do, though, is you've got to really ensure that you pick the winners, because there are projects out there which, I would say would be high risk. And I certainly would say, having a copper mine in Arizona with a credible management team with a great track record. The key thing about this project is all of the mineralization is on private land. So there's no federal regulators involved. We have a right to take water for the next 50 years, and there's an abundance of water actually sitting about 1,000 feet below the bottom of the current open pit in a very strong aquifer. The main power line runs right through the property, so we've got power right there. The city of Casa Grande is only 5 kilometers to the east and is very supportive of the project with a strong social license and gives us access to 55,000 people in the community. We're 45 miles south of Phoenix, which has a population of 4.5 million, and we're 75 miles north of Tucson with a population of 1 million people. If you land at the airport in Phoenix and drive right to the site on Interstate 10, it takes you 55 minutes to get to the mine site. So, you couldn't ask for a better location when it comes to a mining project, and I certainly feel that we're in the right commodity in the right jurisdiction.
Right, I think some great points there, especially around private land. Can you explain to me, so how does that work? Because again, we get so many companies that come on here, and we hear of issues with social license, whether it be First Nations or local towns that do not want mining anywhere near, not in my backyard. We've seen sort of civil unrest, South America. We've seen political unrest in South America. We were talking before the show started about the constitution down in being asked to be changed in Chile and didn't get through, thankfully, but they'll go again. It's a mess out there, and we did a copper show at the beginning of the year, and we're seeing 10 very large development projects being held up for environmental reasons. So there's lots of ways that mining can be very, very difficult. So talk to me about the private land component, and talk to me specifically something you said to me twice: social license. Why are those real and not just buzzwords or phrases?
Well, last year we had a jurisdictional determination survey conducted by the US Army Corps of Engineers, which confirmed that on the property there are no waters of the United States, or WOTUS. So that was really the last hurdle for us to ensure that there is no federal regulator involved in this project. So because it's all private land, we only deal with the local state regulators and the local municipality. And in Arizona, when you're dealing with the local state regulator, once you submit an application for a permit, once it is administratively accepted, and it can take weeks or months or quarters to have a permit administratively accepted, but once it's administratively accepted, the regulator must give you a response within 6 months of that permit being administratively accepted. And typically within that 6 months, they would hold a 30-day public consultation period. Now, the last permit that we actually acquired was the last permit that will require a 30-day public consultation period. And both ourselves and the regulator received absolutely no negative comments on the project when we made that application. As far as the social license is concerned, in the last 18 months, we've conducted 2 perception surveys. The first one was with 400 respondents. The last one was with 500 respondents. And in both cases, we received 82 to an 85% favorable rating to see the mine come back into production. And that was across all demographics as far as, political parties are concerned. Even for Democrats within that consent or within that field, I think it was 67% were in favor of actually seeing the mine coming back into production. And you have to remember, the city of Casa Grande is there today because of the original mine that was discovered in the late 1960s and operated all the way through until the 1980s. Obviously, it's diversified since then, but people think back to the sort of glory days of the mine when there were extremely high-paying jobs, and certainly they recognize that going forward we could create a lot of high-paying jobs and therefore disposable income into the community of Casa Grande.
Okay. Well, I think it's just going to first pass on this. It gives us certainly a lot of food for thought, and perhaps we need to go do a little bit more research on the company. Great to see you again. Before we go, can you just give me sort of just one? I've written down a few notes here. Can you give me sort of the kind of key moments going forward, certainly in terms of around the economic studies and the MRE? What are the timings on those?
Yeah, we're intending to put out a mineral resource estimate on Park Salier at some juncture over the course of the next 4 to 6 weeks. We are continuing to do the infill drilling on Park Salier. So we're going to see infill drilling results between now and the end of the first quarter of next year. And we're planning on mobilizing one of our additional drills in the next several weeks that will go back onto the Cactus Project, and we'll continue with the infill drilling there, which essentially is to move indicated resource into the measured category. This is ahead of a bankable feasibility study in towards the back end of 2023, early 2024. We plan on putting out a rescoped PFS on the project in the summer of 2023 that would incorporate Park Salier, and we believe that will be extremely accretive for the shareholders of the company. And I would expect probably sometime before the end of the first quarter next year, we'll give the market some guidance on how the Nuton technology is actually performing. As we said earlier, with the column tests actually now starting up, by that juncture in time, we should have, 5 to 6 months of real physical column testing, at our disposal that we can actually announce to the market.
Interesting. Okay, George. Well, I appreciate your time giving us a run through of that. We'll get back to you, and perhaps we have another chat. I'm so particularly keen to understand the modelling around the drilling and the infill, etc., and what that's looking like. So thanks again. We'll see you soon.
Excellent. Thank you, Matt. Appreciate your time. Thank you.